All right, good day, everybody. Still here. Daily Market Pulse, Wednesday, January 8th, 2014. So NASDAQ strong, led by medicals and tech, and they go up in higher volume. Um, the rest, for the most part, mixed. Lost a distribution day on both NASDAQ and S&P today. They were at sevens yesterday, down to sixes today. Everything's still above the 8 moving average as well. So everything's still kind of holding. It still looks a little dicey. I mean, after a decently strong day yesterday, high volume, you've got another high volume day again today, but mixed. So it's three consecutive high volume days, all getting higher, higher, higher. Now, of course, that's all coming back from the holiday to some degree, but it's also a week after the holiday. But well, of course, not necessarily a whole week, but I guess this is a true week where things get started. So I guess the buildup is continuing. Higher volume Monday, higher again volume on Tuesday, and again higher today. So the everything building here going into Thursday, and in particular Friday's non-farm and unemployment numbers. Be very fascinating to see what happens leading up to that, and of course on Friday itself. So keep your guard. Distribution days are still high. Last time we did this, things blew higher. So we'll see how things go this time. Let's see. That's about it. Let's look at some stocks, or more so indexes. So here's the Dow. Dow, still consolidating after the bear sash that occurred on the 2nd of January to start off the new year. It's been pretty much in a kind of a grind to the downside, and now last couple days, 3 days, maybe sideways. Opens lower than yesterday's close, but also closes above yesterday's open. Lower high, but also potentially, I think that's a lower low today. So it's still kind of a consolidation flag-like formation. Yesterday's low was 16,429, 16,416. So that's correct. Lower low today. So everything's kind of like flag-like, holding the 8 moving average for now, holding 16,400, which seems to be consistent for the last 4 of the last 5 trading sessions. Still a window slightly below, in the vicinity of about 16,367 or so. There's still support down there into the 20-day moving average as well. So for now, holding, it still gives you the inclination that things could go lower. And then, of course, that may set up for a push higher on coming into Friday, but we'll see what tomorrow brings, of course, as well. Still needs to clear 16,600 to get truly bullish. Drop below 16,400 becomes much more bearish naturally. So let's look at the S&P. And you can see here a little kind of doji, but essentially spinning top-like formation. Pretty neutral today. Right at yesterday's close, essentially, as well. Not much activity today, holding the 8 moving average as mentioned, with the Dow as well. Consolidation mode for the most part, but after a decent day yesterday, you would have thought they might be able to continue this to the upside, and they did not do so, and volume being on the upper side. This is not really usually a good sign. When you see virtually no price action, it's almost like a stalling action. You might be thinking more negatively than you do positively, but of course, every day becomes a new day. So same thing as the Dow. It needs to clear the bear sash high for more bullish activity. Certainly a higher close than yesterday's high as well. A drop below the lows from the last few days here on Monday, particularly at 1824, gets more bearish. Nasdaq, as I mentioned at the top of this, was higher and on higher volume as well, led by medicals and techs. And you can see the support from the window held beautifully. It's classic. Came down 3 days, held, bounced, bull sash, very aggressive, above the 8 moving average. Again today, needs to clear the bearish engulfing high up here at 41.75. Pardon me, to truly be more bullish. It's almost there now. But still needs to clear. So right now, more sideways overall. As you can see, the window is pretty much causing this sideways action until it can clear and close above 41.75. It's not truly bullish. It's really more neutral than anything else. A drop below the window, of course, and a close below the window, particularly 4100, takes us more bearishly. But that only takes us into the change of polarity line at 4070 to 4075, and then we get to see what happens from there. Let's look at the TSX for our Canadian friends. TSX, a little bit of a nice, of course, a nice bounce yesterday, but a little bit of a move back into the resistance area. So it has not yet cleared the highs of 13,645. Needs to clear and close that above that. to remain more strong and more bullish, of course, down to the 8 moving average and below 13,500 would become more bearish, and that would be the change of polarity area, of course, as well. 13,460. Close below that becomes more bearish into the moving averages, and a move potentially into 13,100, as always mentioned. So nice strong bullish move. You look at all the green candles you see on the upside. Of course, this profit taking ability here is expected at a pause. So that move there is currently residing at the 764% and where the bounce was. So now let's see if they can break through from here, remaining extremely bullish, or do they come down back to retest 13.5 and maybe even as deep as 13.425. Let's look at the US dollar, Canadian dollar. Okay, big thrust yesterday in the dollar, broke above the 107 mark. That was the let me see that. Okay, that's just a line that I had based on the dark cloud cover high based on the early parts of December. That became resistance all the way into the 107.50 area. Cleared that yesterday, cleared that again today. So US dollar versus Canadian, extremely strong right now. So US people coming across the border into Canada and buying things would be nice for the strengthening or at least adding US dollars into the country. However, and cheap shopping for them. But on the other hand, Canadians going to the US, not such a good deal right now with this bullish nature. So it was sideways and stuck in that 107 to 106 area, 105.75 area, and then broke out, as I mentioned yesterday, and then continuing on today. So more bullish activity here with the US versus Canadian dollar. The euro is probably something to look at as well. Euro overall continues to look weak and on the short side, and certainly versus the US dollar, same thing, looking like more downside. There's at least an intermediate target down here, right at this level here, and then you'd be looking for another small one down here, and the ultimate one would be down below here, 200-day moving average. Those are the levels to watch out for on the way down. Euro still looking short. Let's look at treasuries. Treasuries are taking a bounce off this 128 level. We knew it was coming up into the moving averages. Nothing had crossed over. The 8 was rising. The 20 was barely rising, but there's not much strength in the overall trend still, but you're still looking for a push. Now look at that lower shadow from today. So it faded fairly aggressively after a lower open and then reversed reasonably well throughout the day. So this could certainly go lower, again, back into 128 and test, but this is key. Does it truly bounce and go up? If it does, you're looking for something over 129, over 129, maybe 20 for that matter, to go back into 130, 131. Still looks bullish, at least short term looks bullish. Looks reasonable that there's some strength on the bullish side. The overall trend, of course, intermediately is still to the downside with the 50 moving average still declining. So that trend is still down, so that's what it's facing. But on a short term basis, it's at least attempting a comeback. There's your lower shadow. There's your close. You see the little candle that just showed up. That is now at least a minor positive action right now. And all of this, of course, treasuries, dollar, indexes are all going to, of course, become more volatile as they approach and come through the unemployment numbers on Friday morning. So all that's going to, sort of crescendo at that level and at that time. Okay, gold probably worth it. Coming back toward a polarity area near 1250, 1255, 1260 area, pulling back a little bit. The 8 moving average not quite yet crossing over the 20. They simply are just plastered together and going sideways for now, but that's holding us support for now. Looking for a little consolidation and a possible push back up into 1250, 1260 area. That would be the 50-day moving average as well, maybe as high as even 1275, 1280. If it can remain bullish. Keep in mind it could still drop back into 1200 or lower, but right now the size of the candles and the selling that we're seeing here, a little bit of indecision, but it looks like at least probably at worst it's profit taking. Probably, and I say that kind of loosely. All right, let's look at oil. Okay, so crude after, and I'll show you this. This was essentially Tuesday, right? So Tuesday starting to pause, giving you a little bit of a Hodami-like formation, a little bit of where the selling was probably slowing down. Look at the size of the candles getting smaller, smaller, smaller. You're looking for a little bit of a kind of bounce, probably into 95, and there was still a chance it could fade into, or at least flush back in toward 92. That was still possible, and essentially you can see what it did. It opened a lot higher, almost matched the previous day's high, and then faded aggressively to the downside and continued its downside descent. Now it's back into that support zone of 92 to 92.50, and then you're seeing a little bit of a Hodami forming right now with a gap higher on the open in the after hours trading for tomorrow at this point. So it's attempting to slow down. It's attempting to reverse. Let's see what they do here. This is where you might start thinking about or seeing a morning star formation if it's going to do anything at all. It's possible that, of course, that may not happen until, of course, Friday's candle developing, but naturally you'd be looking for something maybe higher, like maybe a bull sash. If it gets real aggressive into 94, then you'd be forming a bull sash formation. That would be an aggressive move off the support area. But right now, it's just trying to slow down the selling. Anything below 92 or slightly lower, like 91.50, certainly it becomes much more selling to the downside on crude. I think small caps become always important to watch. We have that falling window that occurred on the 2nd of January, and that's pretty much been holding as resistance thus far. So falling window, bearish engulfing on Monday, and at least an attempt to go higher. And small caps right now are just not happening. If you want risk on, if you want an idea that things are remaining fairly bullish, you want to see small caps going higher. You're just not seeing it. So right now, sideways for the last 5 days, holding below a falling window, right at an 8 moving average, and also above a 20-day moving average as well. So sideways, neutral in the short term. The intermediate, of course, long term is still to the upside as everything remains above a rising 20 and a rising 50 as well. All right, let's move right on over to the VIX at this point. So the VIX came down, hammer, we knew that, bounce, rising window, back into resistance, into the 200 moving average and the 1450, 1475 level, reversed back to the downside. Yesterday's candle, I mentioned, came right into the rising window support, including the 1250 area, which is historically a very good support area. Bounced fairly aggressively with a new high, closing out the gap before a slight fade, giving that large upper shadow. Now, today's activity was pretty quiet. For the most part, it gapped higher, faded, closed slightly positive for the day, but there's still some buyers, at least present, it appears, with a possible attempt to push this back toward 14 and 15. We'll see what happens. Of course, all that coincides inversely with what the indexes will do as well, and including treasuries and the dollar. So we'll see how that all works. Okay, we'll catch up again tomorrow.